I'm Kelly Worthman in the CBSN Denver studio. Tax season is underway, and many Coloradans could be in for quite the shock with new questions and challenges some of us have never faced before. To help us navigate this unique tax season is Andy Phillips. He's the director at the Tax Institute at H&R Block. So we appreciate you taking time to talk with us, Andy. And, really nearly everyone's taxes are going to be impacted by the pandemic, especially those who lost their jobs. So for people who are collecting or who have collected unemployment, how will this affect their 2020 taxes?
Sure. Well, first, thank you for having me today. So happy to join and share some knowledge with you. So for folks who unfortunately lost a job during 2020 and received unemployment benefits, there's a few things to consider. And the first big one is there's a common misconception sometimes that unemployment isn't taxable, but it actually is. It's always taxable on your federal tax return. In most states, including Colorado, tax it as well. So making sure you report it. The second piece is that a lot of times folks don't have taxes withheld during the year from their unemployment benefits. They're used to having a W-2 job where their employer withholds from each paycheck. Well, with unemployment, if you don't have that withholding, you may find that that changes your tax outcome when you go to file your tax return this year. You may see a slightly reduced refund, and in some cases a balance due. What I will say that is at H&R Block, what we've seen thus far is that while there is an increased number of people claiming unemployment benefits on their tax return, the vast majority are still getting tax refunds, so that's positive. On the other hand, for those few folks that may find that they owe a balance due this year, don't delay to file. What you want to do is complete your return now, and you can go ahead and file it in February, because even if you file now and you owe a balance to the IRS or to a state like Colorado, you have until April 15th to pay. So it's better to complete your return now, understand, okay, I've got to come up with a few $100 or whatever your situation is, and make a plan to address it before the due date instead of waiting till the last minute, because sometimes people, when they have uncertainty, they really delay. And with taxes, delaying is really never a good idea, and it's certainly not a good one here.
What about the stimulus payments, Andy? How do you reconcile those?
Yeah, so we had a couple rounds of stimulus payments, one that kind of came out in the spring, then one at the end of the year, really going into 2021 in January. And so for those, it's a bit confusing, but those are actually, those payments you got were in advance of a refundable credit on your 2020 tax return that you're filing right now. So if you're in a situation where you maybe didn't get all of your stimulus payments during the year, maybe you had a new child for 2020 and the IRS wouldn't have records to know that, so you missed the stimulus payment for them. Or maybe your income was really high in 2020, which is, IRS used 2019 tax returns in general to determine eligibility for these payments. And maybe your income was too high to get any or a full payment, but your income, due to COVID or another reason, went down some. You may find that when you go to file your 2020 tax return, that you're actually eligible for more stimulus payment than what you got during the year. That's added to your tax refund or reduced from the amount you owe. It's called the recovery rebate credit. So that can actually be a really pleasant surprise for some people who may qualify for it.
Pleasant surprises and taxes don't always go hand in hand, but it sounds like that might be something we can look forward to. Now, to help make ends meet, many people are taking on some side gigs, working for companies like Uber or DoorDash. What should they prepare for when it comes time to file?
Yeah, so you're spot on. The gig economy continues to boom, and in 2020 we saw more folks moving into that space or just starting a small business in general. Gig workers may not realize it, but once you move into that space, you're no longer an employee. You're considered a small business owner, and that comes with some tax obligations. One, instead of having kind of taxes withheld from every paycheck like you do when you're working for an employer, you're responsible for making payments during the year through quarterly estimated payments. If you haven't done that, again, you probably want to take steps to complete your return early and understand what you're facing. The other thing for gig workers and other small business owners is, while employees really don't get to deduct their out-of-pocket expenses that they kind of incur for doing their work, small business owners, including gig workers, do. So making sure you've got really good records for your mileage, for out-of-pocket expenses is crucial. If you work for a larger platform, they may track some of your expenses. Like if you're a driver, your platform may track some of your mileage. What they're not going to track is some of those out-of-pocket costs. Maybe you're a driver and you also bought water and some phone chargers for your riders or your guests. So keeping track of all your receipts and making sure you share those with your tax professional, or you enter them into your do-it-yourself software, is crucial to make sure you don't pay any more tax than you're legally required to pay.
And last question for you, Andy. Thousands of Coloradans have been working from home for close to a year now, and there are some expenses that do come along with working from home. Are they eligible for any write-offs?
You know, it's another common answer in tax, which is it depends. And so if you're an employee, meaning you get paid on a W-2, there was a large federal tax reform bill a few years ago, and because of that, people aren't able to deduct out-of-pocket expenses as an employee. But if you're a small business owner, those out-of-pocket expenses, including some of your work-from-home expenses, may well be deductible. The one thing to be really thoughtful about when it comes to home office expenses is that you have a space that is used continually and exclusively for business. So other than daycare, special rules for daycare is if you're working from home as a small business owner and you're using your family room that has a lot of personal use, you would not be eligible for a home office deduction. But if you have a dedicated space, you want to bring those records to your tax professional so you're getting the deductions to which you're entitled.
Lots to keep in mind this unique tax season.
Yeah.
Andy, thank you so much for your advice. We know you've got plenty of other tips, and we're going to put them on cbsdenver.com, so be sure to head there, and we'll be right back.